Are we live? Hey everybody, Real Estate Ninja here. I hope you're doing well. Got a story out of Business Insider, and this came from one of my awesome subscribers. His name is Matthew. He's actually a real estate attorney, and he wanted me to shed some light on this and give me some thoughts. And here it is. Home prices may pick up speed after the Fed cuts rates, with 88% of the housing market still overvalued, Fitch says. And I actually completely 100% agree. I know it sounds crazy because I've been telling you about a real estate crash, but I've also told you of a couple things that are about to swing and about to shift. I did a video for the real estate, how to prepare for the real estate crash course on the Fed fake out. And then I did a free version of it on this channel about a month ago, and now it is happening. The Federal Reserve came out and said that they are penciling in 3 rate cuts in 2024. There's a very serious reason for that. I have said it many times before, but the reason why I built this course was like a coaching, mentoring, because I was consulting so many people, and I was so busy with my time with real estate investors. I said, you know what, the heck with this, let's start a course that's mentoring style. So I put in new lessons. So real quick, I do agree that home prices are going to accelerate. I'm going to read this story, and then I'm going to explain which ones will accelerate and how long it'll take for those to flip at the end of this. All right. If you want to be part of the how to prepare for the real estate crash course, there are 80% off links below. It's $199. This is the last week it'll ever be this price. It goes up 10 times that in the next year. And I wanted to make it an opportunity for everyone. So it's making me better as an instructor, as a mentor, as a coach, and then it brings this information to all of you. So that's down below. So check this out. Out of Business Insider, again, home prices may pick up speed after the Fed cuts rates, with 88% of the housing market still overvalued. It says, how home prices may pick up speed after the Federal Reserve cuts rates next year, Fitch Ratings said, offering little relief to an already overvalued housing market. In line with the central bank's own projections, Fitch expects the Federal Reserve to cut interest rates by 75 basis points in 2024. Meanwhile, home prices are expected to move up between 0 and 3% next year, followed by a 2 to 4% boost in 2025. This will continue to have impact. It will continue to impact affordability, particularly in entry-level and first-time home buyers, thereby constraining demand, Finch said on Wednesday. Stand by. I'm going to explain this, okay? Because people are about to freak out and FOMO into this market. The projected increase in home prices would come as 88% of the metro areas in the U.S. housing market were overvalued as of the second quarter, Fitch said. That's little change from 89% a year ago and up from 73% in the first quarter of last year. In addition, the margin by which homes were overvalued widened. Fitch found that homes were 9.4% overvalued in this year's second quarter, which was up from 7.8% at the end of 22. Not everyone shares Fitch price projections. For instance, Realtor.com sees lower mortgage rates slowing demand, and buyers won't feel rushed to buy before rates rise further. Let me dive right into a little bit of this information right now. All right. The median home price has come down off of its highs, but lately it's starting to do this, right? We have a little low, a little high, and what we're about to see with these lower rates are the lowest priced homes on the market around the country jump up, and the media is going to be freaking out. So you have around the country what's called golden handcuffs. There's this just golden set of handcuffs on homeowners all around the country. Why? They cannot sell their home and simply move next door. The interest rates that they are locked in at are around, what, 2.9 to 3.5, 3.6%, right? When I came out and did that clarion call, when the Fed when they announced they were raising rates, I said, if you don't refi now, you are going to be in serious trouble. Go refi. And tons of people around the country went refied. Okay. So now they have that rate. They're not moving. Even if the Fed came down twice this rate, 150 basis points, think about where we'd be. We would still be in the exact same situation for most of Americans with those golden handcuffs. Their rate is much lower than the rate then that's lowered next year, okay? They are still grappling with higher insurance costs. They would be moving into a higher tax bracket with their housing taxes when they sold their home and moved next door. So all of those people are not going to sell, okay? What you have is this small group of people. We have such little volume of home sales going on, and we have this small group of people. And isn't it insane? Please type 1 if you agree with this. It's weird how a small group of crazy people can manipulate and move the nation around, right? Because the media focuses on those little idiots. Now, I'm going to be honest with you. I know it's like, oh, that's harsh. Oh, they are. Right now, like, think about this. The liberal movement, this little group of people. Hey, we're all crazy people, and we're just going to tell you how it is, and we're going to scream and yell, and we need safe spaces. Nah. Think about this. Then the media goes, look at all them. That's the norm. No, it's not. Then you got all these little people. We're going to buy houses because we're going to be screwed. And oh my gosh, the Fed lowered rates. Thank you, Fed. You're our Lord and Master. And then all of a sudden the media is like, look at all them. And what it's going to do is it's going to take that median home price and go beep. Now, the truth is, everyone that has the real estate crash course, how to prepare, go and watch that Fed fake out video. I outline it really cleanly of what you need to do and how you can make money from it. I even say you can make some money from this move, but it's going to be a short window. You see, because the masses would have to have those golden handcuffs released. And how do you have those released? Very, very simple. You lower rates way back down to where they were. Okay, that's not going to come without an economic crash. I want people to understand this. The Federal Reserve is raising rates to quell inflation. But now that they're lowering, the inflation's going to get out of control. And but the little people, you know, the little tiny people, like, we're freaking out. We're the little people. And I mean, the little people, I mean, it's like a little group. It's a small group. And so, yes, you're going to see home prices go, boo, not worth that much of my time. I ain't going to get held up in that. I'm sitting back and letting the crash and the prices come back to me. There's one crazy thing, you know, that crazy guy that says that they always talk about the broken clocks right twice a day. Yeah, that right twice a day is when you make big money. Big money. So let's go back in a little bit more. It says now the story that out of Business Insider, Fitch is saying that home prices are going to go up when the Fed raises rates. It says still between high mortgage rates and rising home prices, the U.S. housing market in 2023 was the least affordable on record, according to Redfin data going back to 2013. That came as persistently high mortgage rates kept current homeowners largely off the market, worsening an already limited market supply. Some relief to this trend may come in 2024 as mortgages have already started slipping from their highs of almost 8%. Now, I want to remind you, if you go back and look at the velocity of transactions, any given day, X amount of homes are sold in any given town, in any given state, and in our country, right? And you start to see when the velocity of transactions, the amount of sales, sales came crashing down, it wasn't at 8% mortgage rates. It wasn't at 7%. It wasn't at 6%. Actually, it wasn't even at 5%. It started to drastically come tumbling down in the 4.5% region. So now, since then, my father contacted me and said, they raised my insurance rates 30%. How can they do that? And I'm like, Dad, we're in a crisis. Yeah, we're in an insurance crisis. Most people don't understand how it works, but that's where we're at. And so it's not just the rate. Since then, since 4.5% mortgage rates, insurance rates have absolutely went haywire for homeowners rates. So, and then you're seeing crisis like in Florida and California, where they're just straight up pulling out of the market, and like, we're not going to do it. And then the state of California is having to look to do a government-sponsored insurance. That's going on behind the scenes. They don't want you to know that, though. So when I say that home prices are going to spike, this is fully aligned with 3 different events that happened in the mid 70s, the early 80s, and then in the late 90s, where the Fed raised rates, plateaued them, then dropped them a little. Everybody, oh, look at, let's buy some stuff. And then it went boom, and rates went exploding higher. And that's what you get to look forward to in the end of 2024, 2025, much higher rates. So if you want to get in and get out on a couple of flip properties, absolutely you can make some money. Yeah, if you buy it right and you're buying it right now and rates do come down, think about what I'm saying here. That's not financial advice. There's so many moving parts in the market. If you buy the property right at the right price and rates are up here, and then by the time you go to sell it, you fixed it, you're about to flip it and rates are down here, you're going to have a larger pool of investors. And they're investors that are not going to be very savvy. They're not investors, they're speculators. So you're going to have a great little pool of investors who are like, oh my gosh, I got to buy this thing. This guy's crazy to sell it. Yeah, sorry, I keep sounding like Minnie Mouse or something like that. But my point being is, yes, this is going to happen. And the cool thing is, and I do this stuff on purpose, because I've kept all these videos where I say, okay, this is going to happen on this date. And I've never pulled it out of the archive and said, okay, now you could all go back and look at that video and we edited it up. I did a video a month ago saying the Fed's about to pull us a fast one, because the Fed has never lowered rates without an economic, like the real rate. I teach this in the course, how to identify when this rate cut is for real, when it's going all the way down for maximum leverage of the economy to make the biggest impact, because this is the real crash. They have never lowered rates without massive real estate price declines and without massive stock declines. And they've baked it out 3 times for political reasons. So you're going to experience that this next year. They've already started, because I've done videos on how the Fed does move rates, and the first wave is the bluff. It's verbal. And they're going to come out, and they've already done it. We've penciled in. Well, just so you guys know what term pencil means, it means it could be erased. It's not part of the dot plot plan. And so they penciled in 3, and they want to see how you guys are responding. So let me ask you this. Type 2 if you would be a buyer of houses right now, even if you thought there'd be a short-term bump. Type 3 if you're like, no, I see what's going on. I see what you're talking about, Ninja. I can see that this long-term trend is leading to a real estate pricing crash. With the weakness of the banks right now, what do you think? What's your vote? No, I'd be a buyer at number 2, or is it number 3? This is why I wrote the course, because I was so busy and it was working out great. And I was making excellent money as a consultant with investors. And then finally, an investor himself says, you need to make a course. So here's the deal. It's 80% off. This is the last week it's ever going to be this price. And then thank heavens, a company that sees the value in it is taking this from me and pushing it. And they're going to push it big. And it's going to be 10 times the price. But I said, I want to offer this to everyone for 1 year. And on January 1st, it ends. So the link's down below if you want to be a part of it. Throughout this year, I'm going to continue to put new lessons as the markets change to let you guys know what I'm seeing. And it's not going to be available on these channels. Hope you have a great day. Thank you, Matthew, for sharing that link for me. Hope you guys have an awesome day. The Real Estate Ninja is out.